raised interest rates 13-fold from 0.25 on the Fed funds rate to 3.25. And they're going to go to 4, we believe, on November 2nd. That's a 16-fold.
Hello everyone and welcome to the Daily Crypto. We are back with another informational video for you guys to enjoy, and this time we are joined by Cathie Wood, who is the CEO and founder of ARK Capital Management. But before we can hear what she has to say, let's take a look at the Fear and Greed Index for today. As of recording this video, it is sitting at 30, instead of yesterday's 32. Currently Bitcoin and Ethereum are trading for $20,200 and $1,503 respectively. With that being said, let's continue with the interview.
But if we're right, and this is why I founded ARK, and we're going to see more disruptive, truly transformative innovation over the next 5 to 20 years than we have ever seen. It dwarfs even telephone, electricity, automobile. Those were 3 platforms at the same time. We have 5 brewing now, and they involve 14 different technologies, all of which are growing exponentially. So if we're right, then the traditional world order will be disrupted, and those indexes are not going to be a good place to invest. Now, what I'm fighting here is history, because as that 20-year phenomenon took place, it became a self-fulfilling prophecy. The more people investing in indexes, the better those indexes did.
Right. Okay.
So we've had our first breakthrough, though, with the FANGs. They're breaking down. And those were the biggest companies in most large cap benchmarks. They're breaking down because of disruption. TikTok is wreaking havoc. And so that's the first case in point. Watch out.
Cathie has a more long-term outlook on investing, as she believes we will see new technologies disrupt the traditional system, which is why investing in old indexes is not a good long-term play. She says we will see a massive shift within the next 5 to 20 years, and it's better to be prepared beforehand because it will be huge and will catch many companies off guard.
When we think about the metaverse, what's the first metaverse experience I've had? It was Zoom. Except it's with our real faces and not avatars. Some people enjoy not seeing other people and living in that world. I don't think it's going to be as mass market as any of their current products. I think it'll be interesting to see how they weave NFTs into the ecosystem. Yassine and I were speaking on the way over about artificial intelligence and how, with the creator community, AI is going to do some mind-blowing things. And NFTs and AI could be a beautiful match. Facebook's advanced in artificial intelligence, and but when you say Hail Mary, I would say this is going to take years for them. I think as the negative network effects associated with Facebook evolve, it will be very difficult for them to make that up with the metaverse.
Since Facebook rebranded itself as Meta, it has been working hard to get into the metaverse ecosystem and be the first mover. However, Cathie Wood believes the metaverse will not be that big of a deal, or at least in the near to midterm. She does mention that it will be interesting to see NFTs and artificial intelligence combine and be integrated into the metaverse because for sure, there will be many viable use cases.
Concentrate into our highest conviction stocks. Now, if you only have 2 assets, you and Bitcoin, I guess that's a little bit more difficult to do. But we started out last February 21, we had been up 360% from the bottom of the coronavirus to the peak in our peak in February of 21. And during that time, we expanded the number of stocks in our portfolio because we had been highly concentrated at the bottom in COVID towards our highest conviction names. And so we went from roughly 33 names to 58 names. There were IPOs, there were lots of exciting opportunities. And then starting February of 21 to our low in May, and we think that's the low, but we're getting close there again. You never know. The Fed, I do believe, is a big menace here. We were down 75%. Think about that. Up 360, down 75%.
Cathie reveals that the ETF of her capital management company was up 360% from the COVID lows, only for it to be down by 75%, yet it doesn't worry her because she has a very long-term approach when it comes to investing. Instead, she increased her exposure to more stocks and reduced her risk significantly by diversifying.
Well, we just published an open letter to the Fed today.
Okay.
And basically said, wait a minute. How can you be unanimous in your decision-making, you Fed board members, unanimous at the last few votes, when there's so much conflicting evidence out there? And so, yes, we feel as though the Fed is making a mistake here, and that, yes, high beta stocks, which would be our kinds of stocks, more volatile than the market, do get hit disproportionately. But something's happening now, and it's happening with Bitcoin as well, which I find very interesting. So our strategy bottomed intraday, the flagship, on May 12th. And the S&P and NASDAQ have broken below their lows. Last week, they broke below their last lows. We did not. Now, maybe I'm jinxing myself, and we will now. But our strategy has held up better since May. And same with Bitcoin. Same with Bitcoin after the volatility in May. It's held in much better. It hasn't hit new lows, successive new lows. It's in a range, much like our strategy is.
It seems as if the Fed is almost destroying the economy on purpose by raising rates this fast, and Cathie acknowledges it too by saying that they are making a mistake. But it's noteworthy that her company's stock and Bitcoin haven't created new lows despite the uncertainty in the markets, which is a really good sign.
During a bear market and towards the end of a bear market, our strategy starts outperforming. Why? There's a saying in our business that the new leadership shows itself toward the end of a bear market. It starts outperforming. So at the end of 0809, for example, I was at a different firm, but our flagship strategy bottomed in relative terms November 24th. I remember it well. And yet the market didn't bottom until March of 09. And in the first quarter, the market, as measured by the S&P, was down 10%. We were flat. And then we came out flying. And I'd like to think that's what's going to happen. The problem is the Fed here. And in the piece we wrote today, we said, please consider the conflicting evidence and at least debate. Talk about the risk of centralization. This is a massive risk because it's not just the Fed. It's not the Fed board members. It's probably one member, and that's Powell, who's insisting on unanimity in their fight against inflation. So what they've just done is raised interest rates 13-fold from 0.25 on the Fed funds rate to 3.25. And they're going to go to 4, we believe, on November 2nd. That's a 16-fold increase in interest rates.
Cathie believes that the Fed isn't really making these decisions unanimously, and it's just the stubbornness of Jerome Powell against his fight on inflation. His egotistical approach has resulted in interest rates being hiked by 13 to 16 times in a very short period of time, due to which the markets have been crushed. We still haven't fully felt the effects of the recent rate hike, and Cathie expects the Fed to hike rates by another 75 basis points very soon.
What are these pension funds selling so that they can be made a little more right, instead of upside down? They're selling the easiest financial instruments to sell: Treasury securities, government bonds. So that's one of the reasons we're seeing our government bonds back up. So we've got the BOE reversing. You've got the Bank of Japan and the Chinese Central Bank, PBOC, both of them are supporting their currencies. What does that mean? It means they're selling dollars and buying their currencies. So it's freeing up some dollar liquidity, and there is a dearth of dollar liquidity out there. So I think we're going to see many other central banks doing that. But I also think when the ministers meet, the G20, in November that the odds of another Plaza or Louvre Accord type agreement are going to be pretty high, because I think that we're seeing deflation in a lot of indicators now. Commodity prices, we're seeing inventories overwhelming retailers. So I think we're going to see a lot of deflation for cyclical reasons. And then secular reasons as well. Innovation is deflationary, but good deflation. It causes bad deflation for companies that are going to be disintermediated or disrupted or destroyed.
We are already seeing many central banks selling their bonds to support their native currency. The Bank of England, Japan, and China are just some of the few doing this, as they are selling dollars and buying back their currency to strengthen it. This does have an upside to it because it will free up a lot of the dollar liquidity, as the global financial system is running low on US dollar liquidity.
That's a domestic consideration. It's right. And most commodities are priced in dollars and so forth. The negative is we're going to lose our competitiveness. And so we're already seeing trade drop off quite significantly. And I think that's going to be, we believe we're in a recession, and trade's part of the reason. Now, interestingly, in the third quarter, if we see a positive GDP, it will be because trade is collapsing, meaning imports falling much faster than exports. And so that helps our GDP in a strange way. And the reason it's happening is we have an inventory glut. So companies are, if you look at Nike's report a couple of weeks ago, global sales up 3.5%, something like that. Their inventories globally up 44%. Their inventories in North America up 68%. And their inventories in transit, probably mostly from China, up 85%. So, it's overwhelming what's going on. And so we're trying to cut back on imports. That's going to back up into these other countries as well. So we think our recession, we think the globe is in a recession, and the dollar is exacerbating.
Since the dollar has been increasing in strength recently, it has brought upon several benefits like deflation, but there is a downside too. One of the major ones is that the dollar will lose its competitiveness against other currencies. Thank you for watching this video. See you guys in the next one.